weekend all. Ira Epstein with your weekend financial market wrap-up, and this wrap-up is for Saturday, the 16th of July, 2022. Well, we certainly ended up on a strong note, as you can see on everything. It was a sea of green in many commodities, from the silver, the copper market, dollar down, euro up a bit here. As you can see, energy markets back up. And, in looking things over, it does not appear that President Biden got any headway at all out of OPEC Plus. They're going to do what they want to do. It was one of those meetings that took place. The president did what he had to do, met with the Israelis. Doesn't sound to me like there's anything positive coming out of Iran. As for the rest of the markets, you know that now we're at the 16th, so in a week or so, starting on the 26th, we go to the two-day meeting on the FOMC, and from that meeting, we should get either a 75 or 100 basis point rate hike. What the market does after that is it's going to digest the information, see if inflation has actually peaked or not. If it has, then the Fed may stay with 75 or 50 point hikes. If not, and the data stays hot, then you're going to go to another 100 point hike probably in September. What about this July? I think it's a toss-up right now. You've just got a lot of the governors are saying they don't have to react to every single piece of information. The 75 is enough. Others wanting to say, no, let's get ahead of the event and go to the 100. That's what you're dealing with. When we look at a monthly chart of the S&P, you peaked out, and this is on a close only, a 478.50, and here you are at 38.65. So we're sitting here, a pretty good drop, right? 900 points or so in the market. You're up for the week nearly 2%. Okay. When we take a look at the same type of chart on a weekly area chart of closes, we can see that the market was down just shy of a percentage point this week. When we take a look at weekly bar chart, you can see that the market's been stepping down on this chart, unlike the dailies, but definitely in a step down pattern. And if the market can clear 39.50 right here, this high, it's something I'd keep my eye on. If it does, it probably means you're going to make a run towards the 41.10, the 41.18 area. Whether it gets there or not, I want to go on record. That is going to be a top area if it does get there. It's a lot to get through. It doesn't make sense that it would keep going through it. I don't see anything that can turn out to be that friendly, this market, as the Fed is the headwind. It does not have any longer the Fed has your back. The Fed is the headwind, and you don't start raising rates and suddenly it's over in 3 or 4 rate hikes. Doesn't work that way. So I'd view the market that if it does get a rally, interestingly, I'd be eventually looking to go short. That could be somewhere in the, probably not in July, but later than that. That's what I'd guess, because this is a weekly chart. So that's going to tell me a lot. Basis the weekly chart, I think 39.50 for me is a setup that says clear that. Regardless of what happens, the market becomes somewhat untradeable because you can get a pattern of higher lows, higher highs into that average. Don't take it out and start reversing course, and you open up the door still for the 200-week moving average at 35.21, let's call it. When you take a look at the Bollinger Bands, before you can get to the 200-day at that 35.20.93, I'll round it to 35.21, the 35.98 level becomes the first support zone. When we take a look at stochastics on a weekly chart, I don't count them as oversold. They're either pointing up, pointing down, or drifting. They're drifting in the sideways action right now, not embedded, just drifting, if you will. It'd be nice to get them to come up, back up. If you can get a rally up here, get back into the 40s and 50s and then turn down. But that's the make-believe. Right now I've given you the scenario. The Dow isn't that far away from this. Lower highs, lower lows, bearish. To clear this and get into the key resistance, you got to get through. I'm depressing this right here for you. You got to get through 31.867. That would bring you into this the whole zone, 32.664 to 32.773. You see that right there. Don't take that out, then the support becomes 29.689 to 29.388. In the Nasdaq, in a downtrend as well. Momentum, as you can see, you lost the embedded reading. When you lose it, it's often a sign you're going to make a run to the 18-week moving average of closes. So I have an argument here for 12,842 as a possibility. If you clear, just the way in the others, 12,262, the odds favor that occurring, and then we get to whatever the Fed and those meetings are going to do. In the Russell 2000, it is the same game plan. You have lower highs, but higher lows. Do you see that? A little bit different pattern here. If you take out in this market 1795.10, I can argue that you get up towards the 1869.60 level. In all the markets, the stock indices, if you get those rallies, I think you'll have trouble at the 18-week moving average of closes. In the 30-year bonds, you've gone up, and now the battleground is the 18-week moving average of closes. Momentum is turned itself to the upside, bias down, trend down. So the market has to now get to the point where it starts running out of upside momentum. That number should be in the neighborhood of about 27 higher at 140.28 thereabouts, the 18-week average of closes. You're fighting the battle right now in the 10-year notes. Same thing, see the 18-week average, and that's right here. Let's see if I can grab that and open this up a little bit for us. In fact, there you are. 119.14 and a half is the 18-week average, and if we can get numbers going through 120.16, well, I guess you could argue wherever the Bollinger top comes in, that would be it. But I do think both the stock market and the interest rate markets, they're going to be capped by either the moving averages and the stock indices and the upper Bollinger Bands in that market. When we step to the dollar index, here's my dilemma. You have an embedded reading, but I teach you not to buy fresh against against the upper Bollinger Band. This was the spot you should have taken some money off the table. Now get good breaks in the market, and I think you're a buyer. What you don't want to do is be a buyer if you take out this week's high of 109.14 and then try buying the break. I wouldn't do that. Get a break first, and I think the market is a buy. I think it'll be, if that happens, probably somewhere between where you finished out at 107.90, the 106 area towards this week's low. That'll be the zone, in my opinion. In the eurocurrency, you don't go short at Bollinger Bands. You have a market that's got bearish readings. Are we embedding? Well, not there. As you can see, you need both numbers. If you look on the bottom left, going sideways under 20. Not there either. So week 1 and 2, that's all you have. Nah, market's not embedded yet. Canadian dollar, lower highs, lower lows. We saw this market get again to its lower Bollinger Band, and it saw short covering. I think that's fairly important. Resistance is back up here. You are got momentum down, but you're not pushing, if you will, an embedded reading. You can just drift in the sideways pattern. You get an idea that that is over if you clear this high right here of 78.01 and a half. Haven't seen that yet. In the Japanese yen, this is a difficult market for me to keep pursuing on the short side. My fear is that one day you're going to wake up. The Japanese government's going to say, you know, we've gone far enough with our policy of the weak yen. We're going to bait that policy. They don't have to say what they're going to do. You'll be up dramatically in the end when that happens. This is nonsense, this break, but it keeps there. So with an embedded reading, I'm still bearish. The target is 71.21. I can see that. Okay. In Bitcoin, you're still very much in the bear camp. You're still fully embedded. Therefore, the resistance still becomes the 200-week moving average of closes. That has not gone away. You see that right through here. And 14,426 is still very much an open target on the lower Bollinger Band. If you can lose the embedded reading, getting this number right here to close over 21, then I'm going to look again for the 32,000 or wherever the 18-week average is. Hasn't done it. Therefore, the 18-week, not the 18, but the 200-week average becomes your resistance point. The differential between Brent and WTI on a weekly closes, you're back and just hanging here at that 18-week average. It's not getting you much edge one way or the other. You have broken down enough, as you can see, to hit the lower Bollinger Band in Brent. You Did it last week and this week. You're holding that number. The market still has momentum down, bias down, trend down, but I teach you not to go short at Bollinger Bands. That doesn't mean if the 111.50 area, the market isn't going to see short sellers come out of the woodwork. It will. But from where you're at, that's $10. I don't see that happening this fast, okay? That's going to take time. Brent WTI, same thing. I am bearish. I see the resistance all the way back here at 108, but that's $10 away. So is anything in play? Well, if he got there, I'd be interested in bearish signals, but I don't think it's in play at this point. Gasoline still coming down. So this benefits all of us because the food and the energy and rent or mortgages, those are the things that are hurting Americans more than anything. How many new pair of pants do we need? We don't have to go to the store and buy that. But the other goods you've got to keep paying for. And they impact us every day that we wake up, go out of the house, and things of that nature. So I like that it's staying down. The question is, will it stay down longer? It is certainly in a bear trend. It has not hit its downside target of 293. Now you realize this low of this 293, you haven't seen that in a long time when you take a look at the market. This area of plateaus, the peak was 254. So when you left that, you took the market, you almost went up, 80% in value. You've backed off, but that is the support zone that I look at. So you put it together. Those are the game plans that I'm seeing. Remember, to get a bunch of our free offerings, all you need to do is go up and click this icon at the very top up here where it says, and you'll see an icon that comes up, free offerings. Give that a click. Take advantage of the many parts that we have from the Linn research, our price counts. You can get my research as well. Many different things to look in there. Just give it a click up here. I'm Ira Epstein. Have a great weekend.